Hello everyone and welcome to Tradesea. In this video we're going to be going over all of the common misconceptions within day trading. Now with social media things spread very quickly, meaning nowadays it's quite hard to tell what is real and what isn't. So in this video we're just going to be going over all of the different common misconceptions that you might have within day trading. Okay, so the first misconception is around indicators. Now a lot of people think the more they know how to use an indicator or the more indicators that they actually use, the more profitable they're going to be. Well, the thing is with indicators is that none of them predict the future and they're all backward looking. So what a lot of traders do to actually try and gain an edge on the market is come over to the DOM. Now over here you can actually see all of the volume at specific levels in the market. So they use this to potentially give them a bit more of an edge than you'd get from using typical indicators. Okay, the next misconception is that you need to be good at maths to be a good day trader. Well, this couldn't be further from the truth. It's simply because nowadays you can actually just click buy or sell and you can see by dragging your stop loss and TP, everything is already created for you and you don't need to calculate anything. What I would argue is a good predictor of whether you're going to be a good day trader or not is actually whether you're good at chess. This is because chess is all about positioning, it's all about pattern identification. So if you're actually able to spot your setup within the market when other people might not be able to do so, then you're going to have an edge and you might become a better day trader because of it. Another misconception within day trading is that it takes ages to learn. Well, some bits do take ages to learn and other bits can be learned very quickly. So when it actually comes to the strategy, this is something which can be learned very quickly. So if we come down to price down here, you'll be able to see that a lot of people just look for a few main things. So people may look for a liquidity sweep, an inverse of a gap, which you can see occurred here, stops below the low, and then TP at some form of liquidity. So all there is in that strategy is three main things: liquidity sweep, inverse of a gap, target liquidity. Now, you've just learned that in 2 minutes. What is really tricky and what actually takes a lot longer to learn is when your strategy is going to win and when it's not going to play out. So this is all to do with something called discretion. So the art of discretion is all about knowing when your trade is going to play out or when it may not be probable to do so, and this does take a while to learn. Now, if you're a beginner and you really want to build discretion, the only way you can really do that is by looking at the markets consistently and also journaling all your trades when they win and also when they go wrong. Okay, and now this feeds into another misconception, is that you always have to be looking at the markets. So most traders I know actually only trade for around 1 to 2 hours per day, so it's totally possible not to be looking at the markets for very long. But if you're learning how to trade and you want to build that discretion, then it's only right that you have to be studying the charts for quite a long time to build that original skill. But once you actually have that, you don't need to be looking at the charts for very long at all. Okay, and the last misconception is that profitable day traders don't have losing days. Well, this isn't the truth at all. A lot of day traders and a lot of the profitable ones are actually the best losers out there, simply because they have two things that they know will protect them over the long run. They have their risk to reward ratio and also their win rate. Now, they know that these two things going hand in hand, if they're good and provide an edge, over the long run, their portfolio is going to be going up and is not going to be going down. So I think the two main things to take away from this video is that you shouldn't overcomplicate trading. You can literally learn a strategy in a few days or a few weeks, but building discretion is that thing that is going to take time and you shouldn't rush it. So thank you very much for watching that quick video. If you have any common misconceptions that I haven't covered, drop them in the comments and I'll get back to you. But thank you very much for watching that video.